Welcome to our channel. Today, we're diving deep into the world of semiconductor ETFs, comparing two heavyweights, the VanEck Semiconductor ETF, SMH, and the First Trust Nasdaq Semiconductor ETF, FTXL. Whether you're an investor looking to capitalize on the booming semiconductor industry or just curious about which ETF might fit your portfolio best, you're in the right place. We'll break down everything from index methodologies and top holdings to risk profiles and performance. By the end of this video, you'll have a clear understanding of which ETF is the right choice for you. Let's get started. What are the primary indices that SMH and FTXL track, and how do they differ in terms of index composition and methodology? The VanEck Semiconductor ETF, SMH, and the First Trust Nasdaq Semiconductor ETF, FTXL, are both exchange-traded funds, ETFs, focused on the semiconductor industry, but they track different indices and employ distinct methodologies, resulting in variations in index composition and overall investment strategy. SMH tracks the MVIS, US-listed Semiconductor 25 Index. This index is composed of the 25 largest and most liquid U.S.-listed companies that derive at least 50% of their revenues from the semiconductor industry. The index includes both U.S. and international companies, as long as they are listed on U.S. exchanges. The primary characteristic of the MVIS US-listed Semiconductor 25 Index is its market capitalization weighting, meaning that companies with larger market capitalizations have a greater influence on the index. This methodology tends to concentrate the index heavily in a few major players in the semiconductor industry, such as Taiwan Semiconductor Manufacturing Company, TSMC, NVIDIA, and Intel. As a result, SMH is typically more concentrated in these large-cap companies, leading to a portfolio that is heavily weighted toward the biggest names in the semiconductor space. In contrast, FTXL tracks the Nasdaq US Smart Semiconductor Index. This index is based on a smart beta approach, using a multi-factor methodology to select and weight stocks within the semiconductor sector. The factors considered in this index are volatility, value, and growth. Volatility refers to the historical price fluctuations of the stocks, value refers to the relative valuation of the stocks compared to their peers, and growth refers to the potential for future earnings expansion. By applying these factors, the Nasdaq US Smart Semiconductor Index aims to create a more balanced and diversified portfolio, not solely based on market capitalization. This can result in the inclusion of mid-cap and even small-cap companies that might not be present in a market cap-weighted index like SMH's. As a result, FTXL tends to have a more varied exposure across different types of semiconductor companies, potentially reducing concentration risk and offering a different risk-return profile. The key differences between the indices that SMH and FTXL track can be summarized as follows. SMH's index, the MVIS US-listed Semiconductor 25 Index, is a market cap-weighted index focused on the largest and most liquid semiconductor companies listed in the U.S. This results in a portfolio that is more concentrated in a few large-cap companies, with significant exposure to the industry's dominant players. FTXL's index, the Nasdaq US Smart Semiconductor Index, uses a smart beta, multi-factor approach, considering factors such as volatility, value, and growth. This methodology leads to a more diversified portfolio, with a broader mix of large-cap, mid-cap, and potentially small-cap semiconductor companies. The weighting of stocks is determined by their factor scores rather than their market capitalization, which can result in a different composition and performance profile compared to SMH. In summary, SMH offers a more concentrated exposure to the largest semiconductor companies through a market cap-weighted approach, while FTXL provides a more diversified exposure using a factor-based methodology that considers a broader range of companies within the semiconductor industry. This leads to differences in risk, concentration, and potential returns between the two ETFs. How do the top holdings in SMH compare to those in FTXL, and what percentage of each ETF's portfolio is allocated to these top stocks? The VanEck Semiconductor ETF, SMH, and the First Trust Nasdaq Semiconductor ETF, FTXL, differ significantly in their top holdings due to their distinct index methodologies, which leads to different levels of concentration in specific companies. For SMH, which tracks the MBIS US-listed Semiconductor 25 Index, the top holdings are heavily concentrated in a few major semiconductor companies. The largest holdings typically include industry giants like Taiwan Semiconductor Manufacturing Company, TSMC, NVIDIA, and Intel. These companies often dominate the ETF's portfolio, with the top 3 holdings alone frequently accounting for a substantial portion of the total assets. As of recent data, the top 10 holdings in SMH can make up around 60 to 70% of the entire ETF's portfolio. This high concentration is a result of the market capitalization-weighted methodology, where larger companies naturally have a greater influence on the overall index. On the other hand, FTXL tracks the Nasdaq US Smart Semiconductor Index, which uses a smart beta, multi-factor approach that considers factors like volatility, value, and growth rather than simply relying on market capitalization. As a result, the top holdings in FTXL are more diversified, and the ETF generally does not have as much concentration in its top stocks as SMH does. The top 10 holdings in FTXL typically represent a smaller percentage of the total portfolio, often ranging from 40 to 50%. This reflects the index's methodology, which aims to provide more balanced exposure across a wider range of semiconductor companies, including both large-cap and mid-cap firms. To illustrate the difference, while SMH might have a large percentage of its assets in just a few companies, FTXL spreads its exposure more evenly across its top holdings. For instance, TSMC or NVIDIA might dominate SMH's portfolio, whereas FTXL would have a more equal weighting among its top companies, including firms that might be mid-sized or have strong growth potential as identified by the smart beta factors. In summary, SMH's top holdings are heavily concentrated in the largest semiconductor companies, with a significant portion of its assets allocated to a few key players. In contrast, FTXL's top holdings are more evenly distributed across a broader range of companies, resulting in less concentration and a more diversified exposure within the semiconductor sector. This difference in concentration and allocation is a direct outcome of the distinct methodologies each ETF uses in constructing its portfolio. What are the sector and geographic allocations of SMH and FTXL, and how do these allocations affect their performance and risk profile? The sector and geographic allocations of the VanEck Semiconductor ETF, SMH, and the First Trust Nasdaq Semiconductor ETF, FTXL, are closely related to their underlying indices and investment strategies, which in turn influence their performance and risk profiles. Both SMH and FTXL are focused on the semiconductor industry, so their sector allocation is heavily concentrated in the technology sector, specifically in companies involved in the design, manufacturing, and sale of semiconductor components. However, their geographic allocations and the diversity within the technology sector differ, affecting their risk and return characteristics. SMH tracks the MBIS US-listed Semiconductor 25 Index, which includes the 25 largest and most liquid US-listed semiconductor companies. Despite being US-listed, some of these companies are headquartered outside the United States. For example, Taiwan Semiconductor Manufacturing Company, TSMC, a dominant player in SMH's portfolio, is based in Taiwan, but it is listed on a U.S. exchange. As a result, SMH has a significant exposure to international companies within the semiconductor sector, primarily from Taiwan, but also from countries like the Netherlands, e.g., ASML Holding. The geographic allocation of SMH is therefore not entirely US-centric, with a considerable portion of its assets invested in non-US companies, despite all holdings being US-listed. This international exposure introduces currency risk and potential geopolitical risk, especially given the critical role of Taiwan in the global semiconductor supply chain. FTXL, on the other hand, tracks the Nasdaq US Smart Semiconductor Index, which focuses on US-listed companies as well, but with a different methodology. FTXL's Smart Beta approach emphasizes factors like volatility, value, and growth, which can lead to a different mix of companies compared to SMH. FTXL is generally more concentrated in US-based companies, though it may still include US-listed firms with significant international operations. The geographic allocation of FTXL is more domestically focused, leading to lower direct exposure to geopolitical risks associated with non-US companies. However, because the semiconductor industry is globally integrated, even US-based companies in FTXL may have significant revenue exposure to international markets, indirectly introducing global risk factors. Impact on performance and risk profile. SMH's exposure to large, international semiconductor companies, particularly in Taiwan, adds a layer of geopolitical risk, especially given the tensions between Taiwan and China. This can make SMH more volatile in response to geopolitical events or regulatory changes affecting global trade. On the other hand, the inclusion of major international players like TSMC and ASML can also enhance SMH's performance during periods when these companies outperform the broader market, given their dominant positions in the global semiconductor industry. FTXL's more US-centric focus reduces direct geopolitical risk but does not eliminate it, as many US semiconductor companies still have significant global operations. The Smart Beta methodology of FTXL, which includes factors like volatility, value, and growth, can lead to a different risk profile compared to the market cap-weighted SMH. FTXL might exhibit lower volatility if the index favors lower volatility stocks, or it might capture more upside during growth periods if growth factors are prominent. This approach can also result in a more diversified risk profile, as FTXL is less concentrated in a few dominant companies and more evenly spread across a wider range of semiconductor firms. In summary, SMH has a broader international exposure due to its inclusion of large non-US semiconductor companies, which can introduce additional geopolitical risks but also offer potential for higher returns when these global giants perform well. FTXL, with its smart beta focus and more US-centric allocation, may offer a more stable performance with lower direct geopolitical risk, but could also miss out on the outsized gains from non-US leaders in the semiconductor industry. These differences in sector and geographic allocations directly influence the risk and performance characteristics of each ETF. What is the beta of SMH compared to FTXL, and how does each ETF's beta influence its volatility and sensitivity to market movements? The beta of an ETF is a measure of its volatility relative to the overall market, typically represented by a benchmark index like the S&P 500. A beta of 1 indicates that the ETF's price tends to move in line with the market, while a beta greater than 1 suggests higher volatility and greater sensitivity to market movements. Conversely, a beta less than 1 implies lower volatility and less sensitivity to market movements. For the VanEck Semiconductor ETF (SMH) and the First Trust Nasdaq Semiconductor ETF (FTXL), the beta values reflect their volatility and sensitivity to broader market changes, particularly within the semiconductor sector, which is known for its cyclical nature and sensitivity to economic conditions. SMH generally has a beta greater than 1, often around 1.3 to 1.4. This higher beta indicates that SMH is more volatile than the broader market. The elevated beta is due to SMH's concentration in large-cap semiconductor companies that are heavily influenced by global demand for technology products, geopolitical events, and changes in consumer and business spending on electronics. Semiconductor stocks tend to be more volatile because they are highly sensitive to changes in economic conditions, technological advancements, and supply chain disruptions. As a result, SMH tends to experience larger price swings compared to the overall market, both during market upswings and downturns. This means that when the market rises, SMH is likely to rise more sharply, but it also means that in a market downturn, SMH may decline more significantly. FTXL, on the other hand, typically has a lower beta than SMH, often around 1 to 1. 2. While still indicating higher volatility compared to the market as a whole, FTXL's beta is generally lower than SMH's. This slightly lower beta is a result of FTXL's smart beta approach, which takes into account factors like volatility, value, and growth when selecting and weighting its holdings. By including stocks that score well on these factors, FTXL can potentially reduce some of the volatility associated with the semiconductor sector. The inclusion of lower volatility stocks and a more diversified approach to stock selection helps moderate the overall volatility of the ETF. However, it still remains sensitive to market movements, especially given that the semiconductor sector itself is inherently volatile. Influence on volatility and sensitivity to market movements *. SMH's higher beta suggests that it is more sensitive to market movements, making it more volatile. This can be advantageous in a rising market, where SMH could deliver outsized gains due to its higher sensitivity. However, it also means that SMH carries greater risk in a declining market, where it could suffer more pronounced losses. Investors in SMH should be prepared for greater price fluctuations and a higher level of risk, which is typical for ETFs heavily invested in the semiconductor industry. FTXL's slightly lower beta means it is still more volatile than the broader market, but to a lesser extent than SMH. FTXL's smart beta strategy helps temper its volatility, making it somewhat less reactive to market swings than SMH. This could make FTXL a more attractive option for investors seeking exposure to the semiconductor sector, but with a bit more stability compared to SMH. While FTXL is still susceptible to market movements, especially those affecting the technology sector, its diversified approach helps reduce the impact of any single factor, making it a potentially less risky choice during periods of market uncertainty. In summary, SMH's higher beta reflects greater volatility and sensitivity to market movements, making it a more aggressive play on the semiconductor sector. FTXL, with its lower beta, offers a slightly more conservative approach, still providing exposure to the semiconductor industry, but with somewhat reduced volatility and market sensitivity due to its smart beta strategy. Investors should consider their risk tolerance and market outlook when choosing between these two ETFs. Are there any notable differences in the rebalancing schedules or methodologies of SMH and FTXL that could affect their performance and risk profiles? The VanEck Semiconductor ETF, SMH, and the First Trust Nasdaq Semiconductor ETF, FTXL, have different rebalancing schedules and methodologies that can influence their performance and risk profiles. These differences are rooted in the indices they track and the strategies each ETF employs. SMH tracks the MBIS, US-listed Semiconductor 25 Index. This index is a market capitalization-weighted index, meaning the larger the company, the greater its weight in the index. The index is rebalanced quarterly, which ensures that the portfolio reflects the latest market capitalizations of its components. However, because SMH's index is heavily weighted towards the largest semiconductor companies, the rebalancing process mainly adjusts the weights of the largest holdings relative to one another rather than significantly changing the composition of the ETF. This quarterly rebalancing helps the ETF maintain its focus on the biggest and most liquid semiconductor companies, but it can also mean that SMH is slower to adjust to rapid shifts in the semiconductor sector, as the composition of the top 25 companies tends to be relatively stable. FTXL tracks the Nasdaq US Smart Semiconductor Index, which employs a smart beta methodology. Unlike SMH, FTXL's index is not solely based on market capitalization. Instead, it uses a multi-factor model that includes factors like volatility, value, and growth to select and weight its components. The index is rebalanced quarterly, but because it incorporates these factors, the rebalancing can result in more significant changes to the ETF's holdings and weightings. For instance, if a particular company's growth prospects improve significantly or its volatility decreases, it might receive a higher weight in the index during the next rebalancing. Conversely, if a company's performance metrics deteriorate, it could be reduced in weight or even removed from the index. These differences in rebalancing methodologies and schedules can impact the performance and risk profiles of SMH and FTXL in several ways. SMH's rebalancing process, driven by market capitalization, tends to result in a more stable composition, with less frequent turnover of holdings. This stability can provide consistent exposure to the largest players in the semiconductor sector, which might be beneficial during periods of market stability or growth. However, this approach can also lead to higher concentration risk, as the ETF becomes more heavily weighted towards a few large companies, potentially increasing volatility if those companies face difficulties. FTXL's rebalancing, based on a multi-factor model, allows for more dynamic adjustments to the portfolio. This can potentially enhance returns by increasing exposure to companies that exhibit favorable characteristics like strong growth potential or lower volatility. It can also reduce exposure to companies that may underperform based on the selected factors. However, the more frequent and significant changes in holdings can also introduce a higher turnover rate, which might lead to higher transaction costs and potentially increased short-term volatility. In summary, the rebalancing methodologies and schedules of SMH and FTXL are notably different, with SMH following a more traditional market cap-weighted approach and FTXL employing a smart beta strategy. SMH's approach leads to a more stable but potentially more concentrated portfolio, while FTXL's methodology allows for greater flexibility and adaptation to changing market conditions, potentially reducing risk but also introducing higher turnover and volatility. Investors should consider these factors when evaluating the potential performance and risk associated with each ETF.